Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, June 26, 2013. And in this video, I'd like to do a quick overview on some of the short trade ideas that look to be offering objective add-ons to an existing short position or new short entries for those who are looking to add some short exposure here. This is a chart of the SPY. As those of you who follow the site know, I've been paying a lot of attention following this channel, this rising or ascending channel, which we did hit a while back. This was my first target, was hit when the bottom of that channel was tagged back here on the 6th, June 6th. Let's move that out of the way and just take a look. This shows that support zone, former support zone, now resistance zone very well. We had this nice gap right here. Prices came back to test the top of that channel twice. So this is a pretty significant resistance zone at this point, because remember, once support is broken, it then becomes resistance. So prices are now struggling with the bottom of that zone. It would not surprise me to see them push higher, although we could turn down at any point in time. Another thing that I've noted before, we're watching the MACD enter bearish territory on the SPY as well as most other key indices. Take a quick look at the Qs. A lot of people trade and follow the QQQs. We have a similar resistance zone here, defined by these two white lines. Oops, there. And as you can see, here's the lower end of that zone is defined by these this previous reaction high back here in that was back in September. Prices came up close to challenging it again, finally punched through. So the top of that zone is defined by this gap here, as well as these several back tests at the top of that back fills of that gap, which help define the top of that resistance zone. So as you can see, the Qs right now are inside of that zone towards the lower half, and again may want to push higher. Anything's possible if that channel or if this resistance zone is taken out on both the Qs and the SPY. We may see a full back test of the some of these trend lines, but as of now, I do favor a resumption of the downtrend. And as the markets often do at times like this, they like to catch the masses off guard. So my plan is to continue to add short exposure. And let's just go ahead and dig in and look at a few stocks that are offering objective short entries. And again, the reason I started with the broad markets is I always like to time my entries and exits on my trades in line with the broad markets. If you are long a stock or short a stock, and the broad markets hit a key support level and most indicators show that we're going to have a bounce off that level, well, your trade is probably going to bounce in line with it regardless of what the charts say. In other words, I give a heavy weighting to where the broad markets are regarding my individual short positions, individual stocks. So now that we see that the broad markets are bouncing back and offering an objective short entry, let's take a look at some of these trades. This is AEO, which was recently added as a short on a break of this support level under $18, which happened just a couple days ago. As you can see here, it's a well-defined support shelf, and at the $18 level, prices did break below and are now we pushed up yesterday and again today, and as you can see, of course, you'd have to be zooming in a little bit or expand it out to full size on the as you're watching this video. But we're right now at the $18 level. This is the current price. So prices have pushed back to that former support, now resistance level, and that's a pretty well-defined line. So looks about as objective as any time to add to this position, or if you didn't take it on the initial breakdown, which happened pretty quickly, another good time to add. I believe the recommended stop on this trade is on a move over 1855, and that will be on a daily close. So there's AEO. Okay, this next one is BAC, Bank of America. As the chart shows here, I'm focused primarily on these orange trend lines here, which form a bearish rising wedge pattern. And as you can see below, clear divergences confirming that bearish pattern. And as I often talk about on a lot of these stocks, it's a very simple but effective strategy. There's this MACD. You tend to be in a downtrend once the MACD is below the zero line. So I've highlighted anything below the zero line on the MACD in red. And if you look at prices above, typically the stock is in a downtrend, even if it's a short-term downtrend, such as these back here. And again, prices have been flirting with that level and are beginning to cross below. You'd want to see them a little bit lower. But as far as objectiveness here, you look at this trend line, and we had a breakdown here, and prices have now pushed back to back test that level right here. So Bank of America looks to offer an objective short entry. And if you also follow, as I make these crosshairs, look at the horizontal line, and we have this reaction high here, and then a whole shelf of support. It almost looks like, if you will, within this little period, a mini head and shoulders pattern. But regardless, you can see that there are a lot of candlestick touches here on this horizontal line. So you have a really intersecting resistance level, this orange trend line, as well as a horizontal line if I were to add one here. Once again, looks like an objective entry on Bank of America. HOV, this is a home builder, another one I really like here. You can see this orange uptrend line that goes all the way back to October 2011. We had this one very brief spike below, but I'll often exclude temporary breakthroughs. We have a lot of tags on this trend line, giving that trend line a lot of validation, in my opinion. Either way, we recently had a breakdown. Prices have come back to retest, and again, you have a lot of overhead supply, something I pay a lot of attention to. On the left of the screen here, the volume at price histogram. These bars indicate the number of trades at each price, and essentially that's a level. If you look at this big long bar here, the green and red bar, that's a lot of trades that happen at that point. So there's a lot of overhead supply. In other words, people who were buying and getting in and out of the stock up at this level. So again, Hovanian's offering a very objective entry, one of my preferred trades on the site now, and these are my downside targets. Weekly chart on this one, again, you can reference these in the static post, but we're also rolling off these overbought extreme overbought readings, which, as the white arrows show, have historically led to very sizable corrections, if not entire trend changes, as this arrow here, and we're recently coming off one of those overbought readings, and we also have this very nice uptrend line on the weekly chart as well, and prices are just breaking below that. So Hovanian looks like it could work out to be quite a nice swing short. I'd see it ultimately possibly coming all the way down to the 350-ish level. Okay, this is symbol HTZ. We're looking at a daily chart. Hertz, another one of my favorite trades. There's quite a few favorites on the site right now. I'm just seeing a lot of bearish charts in price action to confirm it, both on the daily and weekly time frames. So either way, Hertz was a short on the breakdown of this nice, well-defined uptrend line. Prices wedging at the top with the requisite or preferred negative divergences in place on those highs. Broke down, back test. Hertz gave us a second objective short entry up here on the back test of that wedge. And if you've noticed, I've added this horizontal line, this white line here, which marks a former support shelf. Prices had consolidated in that area and then broke below, and we had that very impulsive move once that support level gave way. And if you look at what prices are doing now, here I'll zoom in for those of you that viewing this video on mobile phones or iPads, things like that, might help you see a little bit better. Prices are now very close, just under that support level. So I think it's an objective entry anywhere around here. I wouldn't try to milk every last cent out of the bounce here, but I do think Hertz is offering an objective add-on or short entry here. This is the weekly chart on Hertz, again, something that I've shared on the site. So these are some long-term sell signals with this bull market uptrend line breakdown, which coincided with these very rarely seen overbought levels. So I think Hertz has a lot of potential still to go on the downside. Here's Lennar, another home builder. Not one of my favorites, but still a stock with a lot of potential. We have several patterns here. I'm talked on all these in the past. But if we look at this trend line, I have made a slight redraw on this lower trend line. If I color coded this one to match, that gives us an ascending broadening wedge pattern here. Let's see, I think I had this color here. So these orange trend lines, if you just factor everything else out, looks like a breakdown of that pattern. Prices hit my first target not too long ago, giving anybody the opportunity to book some or all profits. We've bounced since. I could also put a horizontal line here. If we look at these last few reaction lows here, here, and here, and put a horizontal line at that level, prices have now pushed back up. We actually failed there once yesterday, and now we're just below that. So this trade could offer an objective short entry here or an add-on, or one may want to wait to see the former first target level, see this support level go, which would open the door to prices moving down to the second target. Here's a weekly chart on Lunar. We had this very nice support shelf going back, leading up before the last bear market, and that was resistance. We had this bull trap that I talked about. Prices broke through slightly and have moved well back below that, trapping a lot of longs that chased that breakout. And that also came right after this uptrend line break here of this rising wedge pattern, again with negative divergences in place. So over time, especially if the market continues lower throughout this year, this stock does have the potential to move all the way back down to this level. But again, these are my current targets listed on the trade at this time. LinkedIn, this one LNKD. This is a daily chart. This trade has proved a little bit frustrating. When we shorted it, I'm trying to remember where the entry was. Probably on the break of this uptrend line. Prices did pierce into this thin zone, and my expectation was, and still is, once we get in here, especially if we get a sustained move down in there, prices are going to fall rather quickly down to my target here at 127.20. There was a downtrend line I was watching here. Prices did break above that downtrend line, which they then went on to make a back test, which was the first and only back test so far of this trend line. We came back down, again hit the top of that support zone, thin zone, which was highlighted. This is a key support shelf here. My expectation is that prices turn down. We had some very strong divergences in place on the recent highs, and MACD is now challenging that zero line from below. Again, one of my preferred trades at this time. I had thought this would have continued lower once we entered that thin zone, but we sometimes see that prices only entered for a couple days there and quickly move back up. So keep an eye on LinkedIn. I am short this one, and I will be adding if and when we get back down below this key support level here. Okay, this is the daily chart of MDCO, the medicines company. We added this one as a short trade here following the back test of this ascending broadening wedge pattern on June, I think it was June 6th, not too long ago, right around this area here. So this trade is playing out. It is profitable so far, and we've come very close to the first target, which is at 30. We hit a low of 30.81. Remember my targets, I try to place the actual target number a little bit above the support zone on short trades to help assure a fill. So you will notice that sometimes the support zone's a little bit lower. That stock has support there around 29.75. And I prefer this second target, highly favor this second target. Don't plan to cover any of my position here at the first target. Shorter term traders might want to, but I believe once this is broken, if you take a look over at the left, look at the volume of price histogram, very thin, very few trades, and as you can see, because most of the price action between this first target level and the second target level happened on this large up day over here. So my expectation is very similar to a gap, that once this support level goes, prices will move quickly down. And we had nice divergences in place, and let's take a look at the weekly chart here. These are overbought signals here. If we look at the overbought readings on the RSI, with one exception, let's just go through these. Look at the scope and duration of these corrections when prices have reached such overbought levels. Overbought meaning anything above 70 on the RSI. This red line here on the RSI. Let's move this down. Let's expand it a little bit. Take a good look. And you can see the size. These weren't just corrections. These are full-out trend changes. And of course, from '07 to '09, we were in a bear market at that point. So it only makes sense that these lasted a lot longer. Since the bull market has started back in March of '09, we had these other corrections. Now this might not look like much, but if I put up this line here. This signal was given, we look at the crosshairs, yep, right there on the first overbought reading. I put this blue line here, and if you follow the percentage scale on the right of the screen, we dropped all the way in just a couple weeks down. That was about a 30% correction from that level. So although it didn't last very long and the uptrend continued, it was still a very powerful sell signal within this bull market that we're in now. So let's get rid of that. In fact, prices then came back and tagged that to overbought 70 level once more, and I put a red arrow here. This was about the only failed signal. Even then, if you look here on the weekly chart, this we did have a decent correction, percentage terms, 8-10%, whatever it was. So it was still good for a trade. Then the next overbought reading, as you can see, a very large correction. We were overbought here. Took just a couple weeks to play out, but a very large correction. So trading's all about probability, folks. And if you're looking at this, I never use overbought as a standalone sell signal, but when used in conjunction with other indicators. And of course, by the way, we are recently rolling off very, very overbought readings again on the RSI, and hence the reason for this short. Not to mention that we had a failed breakout to new highs. Triple top pattern. We've had these 3 attempts to get past this level, and prices have now rolled down. But again, looking at the weekly chart, beautiful multi-year divergences with the PPO as well as a MACD making lower highs here as prices went on to make higher highs. So this one I think has a lot of the potential to be a longer-term swing trade. In fact, that's why I state this is my primary target, the 2685 area now, and that may be extended. Okay, this is Netflix, daily chart on Netflix, and although this one isn't offering as objective an entry right here, I just wanted to point it out because I'm keeping an eye on this support zone here. Once prices do fall below that support zone, I would expect the selling to pick up rather quickly. This is one of my favorite short trades right now. We had this long, well-defined uptrend line. Prices broke down, retested right here, and have since fallen back to the support zone. So if you look at here, at the upper line of that support zone, we have quite a few tags here. So even a break at the top of that support zone should bring us quickly down to the bottom, and I don't expect the bottom of that support zone to really do too much. I think prices will quickly move down towards my first target here at the 179.55 level, and at this time my preferred swing target is T2 at 145.90. Again, that's Netflix. NTRI, action's been very strong lately on the daily chart, but when you look at this weekly chart, here we are with a nice, well-defined downtrend line that goes all the way back to the highs in 2007 and has defined this downtrend in NTRI, as well as this key former support, now resistance line. So we have intersecting resistance levels. Given prices are just slightly above this, but looking at a time frame like this and the amount the prices are above, we're not clearly, I would say prices are still struggling with this area until we clearly move above this horizontal line, and particularly this downtrend line. And we're talking on a weekly basis. It would take a couple of weeks or a considerable move to put us above there. So being the fact that we are at dual intersecting resistance levels, as well as I pointed out down here before, the PPO is in bear market territory. Again, when we cross down below the zero line, that typically defines the downtrends in this stock. And when the stock crosses above, as it did here, let's see, this was the last cross above. If you follow the vertical line up, and that shows you this uptrend. And again, we're looking at a weekly chart, so this happened for a few months, and that was a very powerful move up. But again, once the stock fell back below, or once the PPO went below the zero line, and it has remained below since, the stock has remained in a downtrend. So we're back testing, if you will, or challenging that level from above. And it's a make it or break it. This is a possible inflection point for the stock. If we do break out and move solidly above this line and the PPO crosses over, that'd be a confirming sell signal. It would be nice if for the bulls, if the RSI wasn't so overbought now, because typically when we hit these overbought readings, as you can see, corrections usually follow. So that's NTRI, another one of my favorite longer-term swing trades at this point. OCN is a stock that's been on the site for a while, short trade. Several things here. This looks a little bit busy. We had this downtrend line break, back test. We've set up since in this slightly contracting and slightly ascending channel. We had an overthrow. I try to color code the different things that I see here. I know sometimes it's hard to interpret these charts, but if you look here, and again we're viewing a daily chart, these orange lines show this wedge type pattern. So what we had here was an overthrow of that channel, that contracting channel, within a bearish rising wedge pattern. And if you look here, the channel all along has had negative divergences building. We had this overthrow, which brought the MACD and the RSI above those downtrend lines on those indicators. But since, on that push to higher highs here, we had some sharp divergences in place, and then prices quickly pulled back within the channel. So that is what I often refer to as a channel or a wedge overshoot, and prices have come back in. If we look at this one, this is the first target here, 29.25, and prices are the histogram, the volume of price histogram is very thin. If that level doesn't hold, we could see this one move down sharply. Take a quick look at the weekly chart. This looks like an ascending, broadening wedge pattern with sharp divergences in place. You look at prices making a higher high, and the RSI and MACD severely diverging there. So not a lot of support underneath that stock. If this pattern were to break to the downside, this one could eventually come way down into the mid-teens here. SKYW, this is a daily chart. SkyWest, another one of the airlines. So I have quite a few airline stocks as shorts on the site right now. We had this orange rising wedge pattern. Prices broke down and retest, and after that I set up, I had posted on the site this descending triangle pattern, which prices broke below. Now if you just focus on this horizontal line here, this is what I'm focused on at this point in time. We had this reaction high, and since then quite a few this line has acted as support for weeks now. Going back here, we had this brief move above it, prices came back below and are now retesting that. So I would categorize this as a very solid resistance level, and prices are below it, as well as this downtrend line that formed off the highs. And again, this was a very brief fake out move, and when you have breakouts like that fail, that is a bearish overall technical event. It's a bull trap or a fake out. So we're at intersecting resistance levels right now on SKYW. My targets are listed below, so I believe that one does offer an objective short entry. TSCO, Tractor Supply Company. This is a daily chart. We believe the short entry was here on the breakdown of this uptrend line, this bearish rising wedge pattern, which did have negative divergences in place. That was a fake out move. That was a little bit of a bear trap. Prices quickly came back within the wedge, made a higher high, but the divergences persisted. And so as prices made a higher high, we continue to make lower highs on the MACD and the RSI, and prices once again broke down below that wedge, which I believe will be the last time, and have come back for a near back test of it again. And I think this one has quite a bit of potential on the downside as a short trade. Let's take a quick look at the weekly chart. We can see this well-defined ascending channel. This defined the entire bull market since the March 2009 lows, and prices broke below and back tested that channel. Beautiful example of technical analysis. Breakdown, back test. They have moved higher since. Normally, after a back test, we'll see prices. That will be the end of the move up, and prices will continue lower. However, we've set up in this nice contracting channel, slightly wedge type pattern, and these divergences persist. So my opinion is this stock has quite a bit of downside to go. Looking at the weekly time frame, here are your key support levels, where TSCO is likely to go over the upcoming months here. Okay, two more to go. UAL, this is another one of the airline stocks. I just added this white line here for the video, but what we were looking at here, UAL was shorted on a breakdown of this orange bearish rising wedge pattern, complete with divergences in place. Prices broke down, went down impulsively, moved back up for a near retest. But what I'm focusing on now is this horizontal white line, which looks like a resistance level. I see quite a few reactions here, and prices have pushed back up to that resistance area. So I think this offers an objective short entry here on UAL or add-on. And finally, XLP. XLP was a short on this, I believe, on the breakdown of this ascending channel here. After that channel set up, I had added this line here. We had a breakdown of this support line and a back test. Just FYI, this candlestick wick here, that's an errant print. I checked it out. Prices never did move that high. They actually stopped right at that line on that day. Sometimes you'll have these false prints on certain chart providers. Either way, prices moved down from there, and now this looks like a support, a good resistance area here. So if prices were to push back up a little bit higher on XLP, for those of you who are not short or who did cover when we hit the first target here at 39, this looks like an objective area to add. I think there's more downside to come over time on this one. Okay, folks, that's been it. That'll end this video. This has been Randy Finney with the right side of the chart, and hope you enjoyed this video.